can see consolidation, as we would expect in the market, right? We know that we've been consolidating a lot. We know that because of that consolidation, that's why we've been seeing a lot of advanced pattern formations. Pound yen does have a completed advanced pattern formation, 2 completed advanced pattern formations, you can say. We will see those more clearly as we go down to our lower time frame, right? So let's draw the first one on. Cryptographer, here we go. Swing high to swing low, X to A to B, B to C, C to D, a Gartley pattern completion. We also have in here, if you may, an X to A, an A to B, a B to C, and a CD butterfly pattern as well. Now, here is what is interesting with this Gartley, and I'll ask you guys first. You see any red flags about the Gartley pattern? Anything that would make you a little bit uncomfortable, perhaps? A tad bit uncomfortable. Greg says stops are at overlapping levels of structure. Yeah, and this is why I like these VS1 levels, because without them, you may be blind. You may be like, oh, look at that. We're above the X leg. We're above structure. I'm fine. But you put them on, right? And all of a sudden, wait a minute. Why is there a big red box here? And you look left, you're like, oh, yep, there we go. I missed something. So this is a cool example, and this was yesterday. So yesterday we had a Q&A session, and we talked about space and the Big Bang and inflation and how the universe was developed and all that fun stuff. But we also spoke about how our trading philosophy is very similar. How we start with kind of with 1 point, right? Our single atom. We start with 1 point, and then we kind of develop from that point out and out and out and out. And how as you become better as a trader, you earn what's called intuition, meaning you earn flexibility, you earn freedom in your trading. And so one of the things that started with when I first started trading, I had very strict stop losses. I didn't have any kind of flexibility in them. It was simply, this is the stop loss. This is always the stop loss, right? So if my stop loss was right below an even handle number, or right above an even, or right below an even handle number, then it was right below an even handle number. If it was right at a Fibonacci level, then it was right there. If it was right at structure, right below structure, then it was right there. Right? There was no negotiating the stop loss. It was what it was. But as I got older and got more experience in trading, I started noticing that I had a bunch of, you analyze your trades, you journal, you review, and you see that, man, like when I have stop losses in places that aren't so great, the probabilities of me getting stopped out, or I call them getting skunked out, that's when like the market barely hits your stop, then reverses. The chances of me getting skunked out are a lot higher. So I started giving myself flexibility. So instead of using just simply always a 1 ATR stop, a single ATR multiplier for my stop, what I did was I gave myself the range where I said, hey, I can use, it has to be at least 1 ATR, and it can't be more than 2 ATR, right? 2 times ATR. So I gave myself a floor and a ceiling. And what that did was it gave me the flexibility where it said, hey, let's say I'm in a situation like this. Well, my minimum stop loss is here. Let's say my maximum stop loss is here, just picking a random point, not actually measuring out the ATR. That means I have the flexibility to adjust my stop loss as long as I stay in this zone. So if you have a situation like this, Greg, where you have a stop loss here and you're like, man, I don't really like it. It's right below structure, right? Having this zone allows you to be like, okay, well, I can use my ability to interpret and analyze the market to make a slight adjustment right here, and it still fits in that rule set. So again, going back to the example yesterday of like, we gave an example about kids crossing the street, where it's like when they're really young and unexperienced, like you hold their hand the whole time. You hold it tight, because you never know when they're going to see like a squirrel and go running into the middle of the street and chase it. Put that as like the newer trader. As you get more experience, right, that leash gets looser, right? Now, we'll take Cameron, for example, my youngest. He's 4 years old, right? So I'm not going to let Cameron just like walk to the park by himself, right? That leash is too loose. That's a bad idea. He's going to get in trouble, right? But if we're walking together and he wants to walk a little bit in front of me, that's okay. But if he gets too much in front of me, hey buddy, wait up, right? It's one of those type of deals. So trading similar, you give yourself kind of that leash, that zone, that electric fence to be flexible. That way, in a situation like this where you're like, oh, this stop loss stinks, I'm in a bad point, I'm probably gonna get skunked out, at least you can make the adjustment. Now, a rule that I have, and you guys don't have to have this rule, it would be something to consider. A rule that I have is that I can only make that adjustment as long as it fits within my risk profile. So, for example, I can't adjust my stop loss if it's going to put me in an inverse risk. Does that make sense? Because now I'm moving one piece, which is great, but now I'm messing up another piece of the puzzle. But with that being said, here is something you may want to consider. And who knows, this may become a change in my future trading, right? Especially with these pattern formations. And I want to put some thought into this real quick. Because yesterday we spoke about values, right? We spoke about understanding what your core value is. That singularity, the single atom dot thing, right? The understanding what is your core value of a trader as a trader, and then growing your philosophy around that. And I just want to have this discussion real quick, because I do think it's interesting. So let's say, let's take a look at this. Let's actually measure it out. We got this Gartley pattern here, and my ATR is 63. So if this is a 1 ATR stop right here, 162.24, that's going to be 88. Right? Let me know if I'm wrong with that calculation. 88, 63 plus 24, 88. That's going to put me right here. So this is the zone in which I can make my adjustment with my stop, right? So I'm going to draw this zone out right here. And I'm going to make this a different color just so we're not too confused here. Let's make this an orange. And let's make this an orange as well, right? Orange, right? That's my stop loss zone. Now, I also know that my completion zone for the Gartley is also here, right? So this is my completion zone for the Gartley. It is from the decompletion, the start of the decompletion, and the Gartley is invalid, right down here, if we violate the X leg, right? So just putting it out there to think, and perhaps you can share your opinion if you want. If I were to adjust my stop loss from the minimum here and take it up here, that may have a negative effect on my risk reward. But what if I balance that out by taking my entry that was initially here and adjusting it up by the same percentage? That way I maintain my risk profile. Is that something that could be done? Well, of course the answer is yes, right? Because in trading you can do whatever the heck you want. But I think it all goes about how you look at these pattern formations. Again, this goes back to your philosophy. So me, right, I take patterns aggressively on the decompletion, right? I want to be in the pattern as soon as the pattern completes, right? For me, patterns are powerful. I don't want to kind of wait around for the pattern to kind of push past the zone and do any type of dance, right? Because I've seen so many patterns. You could look at last week's 3 or 4 pattern completions for as an example of they run up, they hit these levels, and they reverse right away, right? They run up, hit these levels, and reverse right away, right? I don't want to miss those moves because these things are so important. But if you're someone that has a slightly different philosophy on patterns where you understand like, hey, there's this buffer zone and I know that I like to be involved somewhere in the middle of the buffer zone, this is something that you can make that adjustment on, especially if you value your stop placement more than your entry, right? If you value a quote unquote good stop, great stop, more than a quote unquote great entry, well, then it's worth it to make the sacrifice of putting yourself in a position, right? Moving yourself from a position where you have a bad stop to a great stop, because that's your number one value. And then you adjusting your entry accordingly versus the other way around, where again, I would rather have, and I value stops very much, but with patterns specifically, and patterns are really the only strategy I do this with. In patterns, I value the entry more than having a quote unquote great stop. But it's also something I've never considered. I've never considered adjusting, because I never, aside from the only time I adjust the entry is if I have a, like I did it on this one, where if I have an inverse risk reward, or if I have a risk that is too high. So in this example right here, the pound yen, the beast, right? The risk was too much. So I entered actually a lot later, actually kind of right around 161, I think 25s or something like that, 26s, right? But that's because the risk profile didn't make sense. So my only option was to enter higher. I also didn't move the stop, so I still have the original 162.24 stop loss on, right? But that's because I have rules about I can't move the stops unless it's out of my 1-to-1. But it's interesting, right? Because I don't think there's a bad answer. And you know, Francis says, doesn't it violate the rules? And the answer, the question I would have for you before I answer that is how? Does it violate the rules? If so, how? If not, why not? What do you guys have for that? Does moving your entry back violate the rules? Right? And I'm assuming we're talking about what the rules of a pattern, right? Does it? Does it not violate them? Our completion zone of the pattern, right, starts at the decompletion, ends at the X leg. The pattern is valid until we violate the X leg, right? So deciding to enter here versus here, is the pattern still valid up here? If you were to enter market right now, is this still a valid pattern? Yeah, still a valid pattern formation. The X leg hasn't been violated. So nothing has been violated about the pattern. Now, if we broke X, then yes, that's an invalid pattern. And even I know Jason Greystone, he requires a break and close above X to be invalidated. I just need a break. You get past it by 1 pip, done. I don't like you no more. But no, nothing in the pattern has been invalidated. So it's an interesting concept, right? And again, it's nothing I ever gave a lot of thought to, but it goes back, and this is why I love our group here. This is why I love, we used to have mastermind groups and stuff like that. You know, being surrounded by a great community of traders is amazing. Because first of all, like, no one else in my life knows anything about what I do, right? I get a lot of people that are just like, a lot of friends like, man, I see your videos, Akil, man, you're doing great. I have no idea what you're talking about, but it looks cool, right? So there's no one else to really consistently bounce ideas across or you know, hold you accountable. But I learned some of my best lessons through you guys, right? The lesson I learned about the 113 fib inversion stop loss was through our mastermind group, Or we just had a bunch of traders like you playing, and this was before the tier 1 trading days. We had a bunch of traders just playing around with stuff and said, ooh, this works. This is easier. This allows me to get my stop loss on with less calculation and earlier. Have you ever tried a Akil? I'm like, I never heard of that thing. What are you talking about? And then, boom, brought it to my attention. Or whenever one of you guys is going through a trading plan or a trade development, you're like, hey, Akil, would I be allowed to do this? And I start thinking about it. I'm like, I never thought about doing that, right? Because understand, I've been trading a dinosaur when it comes to patterns. I've been trading patterns for so long. And as I mentioned earlier, I started trading them in a very strict way. No, my mentor, it was no ifs, ands, or buts, or just, military. Boom, 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 boom. Nothing wrong with that because that's what I needed. I was very undisciplined. I was a wild cowboy. Just slinging everywhere. Bow, 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 right? So I needed that discipline. But also having that discipline never, and because it worked, there was never a need to think outside the box until certain things occurred, right? Because when you have something that works, you typically don't want to mess with it. You're like, it works. So like, why would I change anything? But over time, again, as you notice certain things like unbalanced risk rewards, or maybe a situation like this, it opens up your mind to consider other things. And sometimes you're like, oh, well, that's cool, but like, no, not going to do it. Other times you're like, oh man, that could be helpful. But fortunately, in my position, I'm dealing with different personalities who have different rules. So even in my mind, where it's like, hey, I don't need to give this much thought because I don't have a problem with patterns. They're working fine. If it ain't broke, don't fix it, right? Someone else may have a completely different philosophy. And I think it's cool to have these discussions because you guys don't have to trade like me. You should not trade like me, actually. You should trade like you in the way that fits your personality and philosophies best. So I think it is an interesting concept. I don't see anything wrong with making that double adjustment. Like with anything in trading, pros and cons, right? Every time you move your entry back, you have to deal with the market potentially not hitting it, running in your favored direction without you, and you being upset because you missed a trade. Vice versa, if you don't move it back and move the stop loss back, you may deal with getting skunked out of the market, price hitting your stop loss by 1 pip, holding that structured and reversing without you. I mean, you being like, oh man, I knew that stop loss was dumb. So there's no best way to do it. There's only the way that is best for you. So I thought that was pretty interesting. Pretty interesting. Any questions about that, guys?